All right, so you need to stop guessing your trade, ladies and gentlemen. You're welcome. Everyone in my group, in my class, and you're a subscriber or a student and all of that. So now, beginner, okay, or you're taking our signals. Or other over time, you can do a lot of if signals come from other peers, fine. But the peers you will trade as a beginner, select. I may not give you what to trade, right? Select the instrument you would love to trade. So as a beginner, number one, I will have to recommend for you because of the little spread and low, volatility unnecessarily is Euro USD. Number one, that's the number one that's going to be recommended for you. Euro USD number one is the first recommended recommendation I make for you. All right. If you know you are going to be scalping and then you are going to be meticulous in your scalping, gold is the number two I'm going to recommend for you. Gold is the number two I'm going to recommend for you. Now, if you then, so Euro USD, GBP USD, but these are correlated pairs, but nevertheless, okay, then USD JPY, all right? Yeah, so USD JPY, okay? So gold, all right, gold, Euro USD, okay? GBP USD, USD JPY, and probably GBP JPY, all right? So now you have come to the market, you have your peers. Euro, gold, okay, probably, so you can add oil, right? It's a very slow one, so you will not going to encounter so much problem there. You can do your analysis. Okay, so I'm not going to go into detail of my technical analysis on the normal circumstances. You ought to do first thing you are supposed to do. Once you pick every of these pairs you want to be trading, listen, once you pick every of these pairs you want to be trading, you go to your watch list on your trading view. All right. If you have not watched how to use trading view, go to that onboarding Google Drive training that will give to everybody. Now, so you're going to go to your and add. Look at it. Go to watch list. Now I can hide it. Right? You can open it and go to your watch list. Look at the plus sign you add. I'm not going to be teaching this. And then you search for Euro USD. Right? Depending on the broker you're adding. So I use Wanda. Okay, Wanda. Now maybe you're using CM market, CMC market, or forex or whatever. So or forex.com. So anyone. So you are good to go. Okay. So if it's forex.com, you're good to go. So let's say I put in into forex.com, and then so it's going to be added to my chart. Very simple. It's going to be added to my chart. Now, very quick one. So you have to do your pre-market analysis. Now, we have said you must understand one of the first things is that you need to look at what is the fundamental for the day. Okay, what's the fundamental for the day? This recording is done in September 10th. Okay, it's September 10th. So I need to know what's the update of the day. I want to start my trading. All right. Of course, there is a session you want to trade. Now, I look at it today. We're having PPI and all of that. This is a core news, red envelope. And so that means it's a high impact news. So by 1:30 p.m., West African time, or depending on the time location, you can change to your own local time location by going here, click, and then do all the necessary stuff. All right. Now, so if that's the case, I'm going to go back to my what's it called? Go back to my chart, okay? And so you have identified the instrument you want to trade, and you have told yourself, these are the instruments I'm going to be trading. So you are going to do top-down analysis on them. But before that, you already have as a stamp of those instruments you are going to be trading. So I do what you call key level mapping from the weekly time frame. And so I'm not going to go into those details. I just want to go very fast so that you look at what are you looking for. So if I go on weekly time frame, so very simple thing I do. So if you check my previous video, you're going to see all of those things. So if I go on weekly, so this is weekly. Okay, here is weekly. So I go on weekly first. And in my weekly, there's something very fast you need to do on your weekly. Just a moment, guys. So on my weekly, there's something very important I need to do. I'm going to change my chart into a line chart. Okay, I'm going to change my chart into a line chart. And the reason for that is that so that I can do my marking as proper as possible. Okay, so look at what I'm going to do. I'm going to, so let's go this way. So I'm going to change it to line chart. So I'm only going to do one, okay? And so you do others for yourself. And but I've told you, you have to face a few number of instruments you want to be trading. So they are very important. Changing to line chart. So here is being changed to line chart. So I'm going to do something. I can just use maybe just horizontal line so that to be fast. So there are other things I use, but let's use horizontal line. And so this is horizontal line. Look at it here. So I pick my horizontal line, right? I look at the roof, that's the top of the market. So I place my horizontal line. So I change to the color I prefer. So I'll make it thicker, and I change it to black or something for my weekly key level. And then I pick it again to go to another important area. This is like a turning point, right? So I paste it here. So now I'm not going to do too many of them so that I can achieve what I want to achieve, right? So here, I just keep here, and maybe the last one I'm keeping here. So you go work your own out later, so and follow the procedure. Now you ask me, Felix, what are you actually checking? Okay, what are you checking to put all this? I'm checking turning point and all of that. So I go down from that weekly time frame to daily time frame. So I go to a weekly time frame to daily time frame. Very simple, right? Then I want to check other areas that were not captured properly, but there were turning point there or touch point there and all of that. So if I pick my line again, I could find one here. So let's say here. Now, but this one, I need to now change it to something smaller, maybe 3 points with, and then the color, probably I can change the color to maybe purple or something, just going to be different from the black. Okay. Is there any other one? Okay. Even if there are, I'm not going to go into all of those details to that extent. If not, you find probably here, just to train your eye to see, right? So train your eye to see. Look at this. This is a turning point. This is a touch point. This is a touch point. So train your eye to see, okay? So if I need to fix, I fix everything. So now I've done this. Very simple. Now you do it to all your instruments you want to be trading. Understand this, please. Very, very important. You are going to do it to all the instruments you want to be trading so that anytime you come, you know what to look out for. Very simple. Okay. Now, so we're going to go back to the candlestick. I go back to the candlestick. Now, there we go. Now, so if you look at, there are lines on my screen, meaning that there are news that are coming by 1:30 p.m. local time. That's GMT +1. Now, you've marked this. This make my trade very simple. So every day I come, I will open my chart on a daily chart to see what the market is actually doing. Let me see the opening of the candle. This is where the strategy we trade is simple. Now, even me, if I like, on my daily chart, I can look at my Euro USD and I do a diagonal support trend line. Okay? Just to make the whole thing simple for yourself. Instead of jumping around too many instruments and all of that. As a beginner, you don't have those energy. You're going to be confused because by the time you are going from one group to another and then asking them which one is trending now, which one are we going to trade now, and all of that, it's going to be very cumbersome for you. All right? So now this is a kind of trend line, right? I've taken it now here. Okay? So I probably look at this market is still an uptrend. Am I correct? But of course, at a point now, it's just like is stranded. Okay, let's look at. So let's just push it up. So you project it to the future. So I'm done with this, right? So every time I'm coming, I just want to see what will happen. Either on gold, you do the same thing. Gold is meant you can be doing your regular scalping on gold. But warning, don't scalp. Now, new market has opened. Don't scalp gold when session is on. Now we just enter London session now. And you want to scalp. No, at this point, you want to look at major market reaction, your triggers. What have you identified or highlighted to be your trigger when the market actually happens? So here we go. Now, this is the daily time frame. So when I have marked out, okay, I want to look at where is the market going to go. Now, so that means in our style of trading, I Felix trade past strategy. And what is past strategy? Price actions, price action, resistance, support, price action, resistance, and support strategy. Now, so of course, putting all that few things into consideration while we are looking at all of those factors. Okay, we put other things into consideration while we're looking at all those factors. Now, when I come for the day, I'm interested, of course, to see the direction of the market. Overall market trend in daily time frame is bullish, right? It's bullish. Okay, so how do you know that? This was a high, all right? This was a high, and this was a low at the point, and this was a high. So this was a low, all right? So that means we have a high, a low, a high. Now this becomes lower than this, right? This is lower than this. That means market is actually trying to change trend, but there's something still missing. Markets now have created a high and a low here, and then a lower high, and then it has broken structure and came down to this point, which is a lower low to this. And this is lower high to this. Then market scooped up. But fine and good. Where will this market be interesting to you? It's going to be interesting to you so much that this one had traveled up here, but not getting up to this. That means market is actually trending down. Though you have this your trend line still bouncing, market still bouncing off it. But this is a high, another high, but this one lower than this. This is a low, now this is another low, lower than this. So this is very fantastic, right? But the market became choppy over a period of time, for a very long time, and struggling. This one has not been taken, all right? This one, neither has this one been taken. Now this one, all right, this one was the previous high, and this was the previous low. Now this is it. This low had been taken. On a daily time frame, right? On a daily time frame, this is already break of structure or market structure shift, okay? Because this low had been taken off, all right? And then this high is lower than this. So now, what's your focus? You have seen the overall bias of the market. Oh, market is somehow struggling, and then this was supposed to have crashed down, but unfortunately the guy was not crashing down. So now you look at the previous day candle. This is the previous day candle. What did it print? And in your normal way of your trading, you want to mark the previous day high and the previous day low. There's an indicator that do that, but you can't always front your indicator on your trading all the time so that it won't confuse you. Now, but you can do a simple marking. Now, a simple marking is this. Look at the previous day high of the candle, which actually align with this, and the previous day low. So very simple you do is this. You're going to mark this out using your, okay, just to mark it out. Now, see, all this you are doing is when you actually woke up to the market and then you continue for the day, right? And then so that you always work out things by yourself. So if I want to make it very simple for myself, I can take it up to this and then, okay, clone it, get it cloned. Then I take it up to here so that I won't confuse myself, right? So perhaps say here. So this is the previous day high and previous day low. Now, the market has opened. Ordinarily, you will want to think that the market should crash, right? Yes, fine. Because you have marked your key level. That's what key level help you to do. On a daily key level, the market is below the daily key level. fine and good. But there's something that the market has done. Now, for the fact that the market opened and first went up, and then we should be supposed to be crashing eventually. And then that means you'll be looking at this low of this candle. Now, so you're going to look at it, oh, what should I do then? So I want to actually trade. So this is a market that is below daily key level. So we should be looking for a sell. But unfortunately, the market is reacting somehow. And how is it going to react? How is it reacting? The market has opened, but swept this low. The market and news is ahead. So news is ahead. If the news go negative against US dollar, then you are going to see a massive pump up. And so when there's a news coming to the market seems to be sluggish, and no much persons want to slot in their money not to be slaughtered by news. So if not, this market ought to have sold down much, but it has not. Then you are going to go to 4 hours. Now, what am I doing in 4 hours? You're just, what do we call? You're just refining down to find an appropriate entry. Now, listen, here, look at the 4 hours. In 4 hours, it has indicated that the market has swept the previous day low, which was this. All right? It has indicated that the previous day low have been swept. Makes sense. Now, what an area of importance that this market ought to go for me to find an entry for buy or for a sell. So if the market do not get to those points, now on your 4 hours, you're going to mark some other point, which are called pivot point, right? Here I go. I'm going to mark this one as a pivot point, okay? So your market will be highly structured. And when the market gets to a point, you know what to do. You know when to take a trade or not to take a trade. Then you have another pivot point here. I'm not going to go advance a lot of those demand zone, supply zone. I'm not going to do those things so that will complicate issues for you, okay? All right, so you have another point here. So all of these points, I can tell you that these are liquidity level that the market will come back to sweep, right? Just like how the market has swept this liquidity here, all right, in conjunction with this one. So it has shown that, okay, maybe the market actually want to travel up. But if it's going to travel up, there's another liquidity up, which is the previous day high. Now that the market has opened and the previous day low had been taken care of, then we should be thinking of how the market was going to take the previous day high. It doesn't matter now, but if you take out that, where are we going to go? But if you refuse to take it out, so what do I do? So you are looking for more of kind of rejection candle so that you can sell down to this key level, which is the weekly. And you can see that there's a confluence of your trend line and the, what do we call, the horizontal key level. So all of these are key levels and area of interest that market should be taken, as it were. So then you ask yourself, what should I do here? You can't do anything here except that if the market actually bounces into the zone. Now let's go. I've marked the other relevant point. I'm going to go to 1 hour. So this will be very much simplified for you to take trade, okay? Now, if you go to 1 hour, you realize that on 1 hour, you realize that, look at it. I don't want to go too complex because if I go the advanced, I'll be talking about some of those fair value gap and then, you know, those other area of interest and all of that. So now, let's look at it. The market has actually came down, and if I adjust my line to where it was, it actually hit this high. All right. Now it has hit this high. Now, ordinarily, if I was trading and I'm trading Euro USD, I probably would have entered long, and I will tell you how, because I will have refined it down. Now that the previous day low swept, the market came back again, sweep it, I will have find an entry. And how do I find an entry? Is to refine down to a lower time frame, which is go to 5 minutes, 5 minutes. Now, if you look at 5 minutes, this is 15 minutes. Now, going back to 5 minutes, I'm going to find probably style of entry. But at this point, you probably wouldn't have been able to enter because the market, right? The market has done this. Look at it. Let's go to 1 minute, probably to get a proper refining. And then, okay, good. So here is it. So the market has traveled down from this high to this low. So you are now, so if you look at this market ordinarily, it still boils down to the market recovering back to the zone. Are you seeing something? Now, this is 1 minute time frame. Let's quickly look at it. Now, the high that created this low that touched this, the previous swing high, was this. So what do? You're going to mark it out. I'm not going to call any name what they are called, but you just need to understand this. Now, your point of interest for buying Euro USD, right? Because you know that the market is actually somehow bearish, all right? Now, here is the low. Here is the high. Now, the market now start moving, right? And you want the market to move and break above this one. Please be meticulous. This market is very fantastic to trade, but if you are not meticulous, it's going to be a problem. I'm telling you, if you are not meticulous, it's going to be a problem. So look at it. The markets move, okay? Somehow break this. At least if you break with the body, make more sense, right? And now maybe probably just do and then return. It's going to look for any entry at this bottom. Probably anything that, no, so it can align with this. Secondly, it can align with maybe there is an imbalance. So there's a gap in at this level. So you now come to that and then start going up to break a structure and then maybe a pullback, then it continues selling. Okay, so now see what I've just done. So that means under normal circumstances, you have not find a buy here, neither have you sold. Now, as the market did that, you're looking for the market to take out this. And probably if there are imbalance here, maybe a jump. So what do you mean by imbalance? Look at it here. Here to here is an imbalance. Here to here is an imbalance. Here to here. Because the market open, move, and then the new one open, and it didn't counterbalance the other one. Okay, so I don't want to talk too much about, what fair value gap and not like. It's just to show you simple market entry with support and resistance strategy, but having your structure set properly. Okay, so they are very, very important for you. So here you go. You are now patient. So you are not jumping at the market randomly. No, you are not doing that. You're waiting for proper trigger. Now, so if this market now, look at what it's doing. If it refuse to break above this and it come to break this is another level for me. If we come to break this, look at what I will do. If we come to break this now, maybe take out this and then rejected. So I need you to take out this now and probably have some kind of rejection. That means I'll be looking for a sell from this point to this point, which is going to give me about how many pips? 48 pips, right? Which is very big. Okay, yeah, that's what it means. So if I'm going to look for a rejection, let me do an example in an account. Let me do an example of what I'm just explaining. Okay, so ordinarily I will have sold. I didn't even come here, but I'd come here, I will have sold because this is exactly what I want to explain. Now, the market that was rallying up before, okay, so what do I want to see? I said, when the markets have moved all of this, I just want to do you an example or kind of sample that will help me and you. So if we come back here, look at what we're analyzing. We now said we want this one to be taken out. So when this is taken out and we have a rejection below this, we are going to sell. You see, there's a line I drew on that was going to give us that. And then I can see where my market was going to, where my take profit is going to be. Right? If you look at it here, from here down to this point, my stop loss above where it turned from or above this line. And that's what it is. But right now, it's not tradable because it has not given you a green light. Now, someone may jump in selling this. Well, that would be a very bad one because you can't even define why you sell. These are the issues. You can't even define why you sell. Okay? So you define step by step. And that's the first simplest trading pattern you can always have. First, you look at doing your what we call market marking of relevant point, and then pre-market analysis. So marking relevant point, it does not really matter what time. You can do it ahead, and then you are now using that map to do your trading. Second is now pre-market analysis. Now, So market mapping, we say mark your key levels. So marking of key levels, weekly, daily. Now for position trader and swing trader, they do from monthly, right? So but you don't need all of those. What I check in a month is candle opening and close. Month has ended. What did it end with? What type of candle pattern or what we call chart pattern do we have for this month? If it's maybe this double bottom, double top, or whatever type of things. Okay, so what type of candle pattern do we have? And for that month, you want to decide what to do. So, but there's a zone, there's a place where market would be. It's untouchable. You want to just avoid it and let it give you a real green light, for you to now say, okay, I'm stepping further. And this is the reason why I'm stepping further. Do you understand? So for now, this one, I can't go anywhere. I have a point here that the market will come and what? Break. So if you break this point, I take it more serious, right? So I take it more serious. After breaking it, that's not all. So there will be a place I want you to return back to. But take note, sometime when the market becomes so aggressive, it may move so massively. When the market has moved so massively away from that place it breaks, let's say the market broke this point now and moves over 50 to 70, 100 pips. That pullback will not come down here. May not recognize any imbalance here. It will just have a shallow pullback and then you are looking for an entry. That's all. So you need to understand that. But just understand what I'm trying to point out. You see, you are looking ahead. So it will ease your entry and even where to target as your take profit. Very simple. But if you don't do all of this, you'll be gambling. Because if the market come back and take out this, then return, retrace, and you find your entry, 1:2 risk reward may not be so high that you will not be able to get your profit deliver as fast as possible and how it ought to be. Okay, so you can see that's what we have done for Euro USD, to find an entry. So look at GBP USD. Sorry, not GBP USD. Look at gold. Let's look at gold. XAU. Look, this is gold. So if you want to go marking on weekly, but I'm not going to go to do that now because I've done that as an example on Euro USD. Okay. Okay, I think I didn't have a mapping on gold before. This is weekly, this is daily. You see, return back to daily, and since that time has been buying massively. Now, another thing many people do not understand, you can just see a candle pattern and you say, okay, that market is going to sell. Look at it. This is gravestone doji, and this signal a reversal potential. It's potentially telling you that this market is going to reverse. This on daily candle. But what happened? Reverse was the case. The market opened, did what they want to do, sweep liquidity, and down, moving up. So you have to be dynamic to understand because the market is extremely bullish, and so this candle is abused. This one was honored because the direction of the market, but this candle was abused. All right. And so it's not about the candle. The preceding candle was what to tell you the story. This one is only telling you I have a story. Now, it's the next candle that will tell you this is the story. Now, this candle today, if this candle, the way it's moving, for the fact that it's moving very bullish now, does not mean that it's going to close bullish. Why? We can have it like this, and then after close to the break of the day, close to the close of the trading day, or even during the news, we'll now have that massive drop. Okay? So, but before that, somebody had made money because I sent this signal and I told some persons that are looking for an entry here. So let's look at gold. Now, let's look at yesterday candle of gold. This is it, the high of gold, previous day. Okay, just understand, depending on where you're watching this training, all right, the previous day, and then the previous day low. Okay, we have gotten these two guys, right? The previous day high and previous day low. Now, you don't need to struggle it. You're already seen that the previous day low had been taken, have been swept. That's a liquidity area, okay? Now, it's not a yardstick sometimes, so you need to understand, depending on what you see in the momentum activities of the trading, right? Because if you say here, the low of yesterday was not swept here, okay? The low of yesterday was not swept here because it's a continuation, a bullish and strength candle. The low of yesterday was not swept here, right? The low of yesterday was not swept here, but there was a pullback, right? So there was a pullback, and then you are going to do it. So now I've marked all of these. Automatically, you know that's a bullish market. Very simple, right? If it's a bullish market, okay. So I think we need to return back to our Euro USD eventually to know what we're going to do. So now let's go. Now we're going to go to 4 hours. Look at 4 hours. That 4 hours I've shown you that there was a sweep of liquidity, right? If you don't get it properly, you can right click on your screen and click on session breaks. Now, session breaks showed you this was yesterday. So you can adjust it properly to know that it closed the candle. Now, this was a sweep of liquidity. Very fantastic. And the market, you know that that's a bullish market. So your trading range for that day is from here to here. All right? And that's why I love going to the market at the market open. So I can decide what to do. In fact, before all the major zones, especially on gold, all the major session open, you will have make your money you want to make. Trust me. Okay, imagine what do you say here? What do you say here? A sweep of liquidity. Fantastic. That makes a lot of sense. But sweeping liquidity is not the issue. Okay, it has swept liquidity. Okay, what happened next? I've seen that, okay, market swept liquidity. Oh, fantastic. So what should I do? All right? What should I do? Now, I'm going to go down to, no, so 1 hour, is it too necessary? Well, fine, you may do, but for me, it's not too necessary. Okay? But you may want to mark some pivot point on this. So you can imagine after market was swept, look at Gravestone Doji. Another Gravestone Doji was created. So I mark it as a pivot point, right? And then are there other relevant pivot point I could mark? No, none. That's the truth. None. Okay. So, but look at the funny thing that happened here. You have come here, and the market that first swept the liquidity and all of that. So look at 1 hour. The market, Gravestone, and this crazily pushed down. Look at this push down. That was massive. So that means we ought to be selling. Yeah, we ought to be selling. So this sell did not occur. Can you see? This sell did not occur. So massive candle sell. Now, people who trade just one single candle will have make a lot of money here, but they will scalp. All right? They will scalp, they go to 1 minute, and then they will have traded enough. Now, so you know you've marked this. Now we go back to 30 minutes. You're going to have similar scenario, right? We go back to 50 minutes. You definitely will have similar scenario to say that this is a sweep again. Okay? We have the previous day low, all right, here, and then you sweep out the liquidity, right? And then we have a total sweep. The market rally up massively. This is like, what do we call it? A rally and crash. And so this is a displacement. The market came back and sweep out of this. Okay, you have similar candle here. You want to have a return of that same candle. So here, market has returned here. So to sweep this low again. Then let's go to 5 minutes. Good. Because you have created map, and that's going to give you confidence to trade the market. All right. Now, so when the market came back here, even 5 minutes, it created something like a double bottom. Okay. It created something like what? A double bottom. And where is the double bottom? Just click on your line chart, you'll see. Anything you are looking for properly, you cannot find, just go to your line chart properly, you're going to see. Now, this is the neckline. Makes sense, right? And I have a reversal trading pattern that I've taught many of us. Forget this leg does not balance, but as it does not even balance, make a lot of sense. In 5 minute time frame that you have come back to listen. Now, the market has rallied down to this point, makes sense. And I told most of you as my, protege, and I said, hey, every time 5 minutes now, stop. You mark it as a region. Look at it here. This is a region. But this thing is going to be very difficult if you are not focusing on an instrument. If you are jumping from one instrument to another, I can tell you, you will not achieve what I'm teaching you. That's where the problem comes. And how do you achieve just facing one instrument? Because as you come for the day, you want to check the structure, how the trend, is this one trending properly? I chose to go with the market that is trending, have a very nice structure, not choppy. Now, when it's choppy, I try to avoid it so that I not to take my time, waste my energy. So, having done this, probably when you come, when the market open, it swept this liquidity, previous day low, it swept it. And now, having swept it, you know that's a massive one to take the market. The market had done this, see the first move of PIM, the market open. All right? Look at it. It swept it. Look at it. Many may not see it. Look at it. Okay, so let me just put a line here. probably so that we return back to it thereafter. But I don't want to do unnecessary stuff. Look at it. Okay, let's go. I just wanted to see. So let me remove this thing so that you see this low. You have to be meticulous in your trading. Trading is mechanical. Good. So look at something. This line you're seeing was the yesterday. Now this was today. The new day trading. Okay. So the new day trading, look at what has happened. Look at what has happened. Market has swept the liquidity. Then I mark this week out. Right? It's my trading strategy. As I mark it out, what do I expect? Now, market to rally up. I want the market to return back there. Number one, sweep the liquidity that is fake out. Number two, get failed rally, fail to get to that point. That's number two. Number three, get to exact point and bounce. That's a double top, failed rally, sweep of liquidity. Okay? Double bottom, double top, failed rally. So that means if you fail to get here, let's say it stopped here, this become a low, and this become a new high, and then this become a higher low. So when you create that, what you may be waiting for, sniper entry trader are going to take trade from this point and put stop loss here. It's deadly risky, right? Very, very risky. That type of trade is risky. So be careful not to fall victim of that, okay? So it's deadly risky, very deadly risky. So, but what you are supposed to do now, so if you type, now take a small entry here. Now, when I take a small entry here, I'm going to, when the market break this, look at what you expect. When the market break this, you expect the market, okay? You expect the market after breaking this, you expect the market to come down and actually fill any gap left. Now, so that is to say, there's a gap left here, small gap, and then there's a major gap here. So you expect the market to pull back to it and fill it. But the market didn't do that. Market rallied up. So the person who took small position will have been in money. Now let's look at it. Rally, yeah, double bottom, and then look at it. Let's look at it. How many pips? 130 pips. Now, why I always recommend 1:2 risk reward. You know, this is not 1 minute. If it's 1 minute, we'll have seen something massive. Look at it. This person, after this engulfing candle, you can lose trade. Okay, you can lose trade easily with this, but your stop loss will be very significant, right? Now, 1:2 risk reward. That was already too big. Look at 1:2 risk reward here. Good. This is a 1:2 risk reward. You have done 97 pips already. So now, fine, no problem. The market move and move as massive as possible. Let's look at this high here. It got to this high, got rejected. And then what do you have? You have this candle, you have a bearish engulfing, and then the market was doing. I can tell you that you may not take this trade. You may not have energy, you may not have time, you may not have conviction to take this trade. Very, very likely. I can tell you that. Very likely that you will not take this trade. But what trade are you going to take? The market, so follow me, please. The market has come down here. Remember, you have known your buyers that the market is bullish, and then that's why you're doing this. The market has rallied down here. Look at another thing. Let's now go to the previous. This is still continue to be previous. Now, fantastic. The market what? Swept this liquidity. This one. Swept it and rally back up. That was a very good one. But rally back up is risky for me and you. Why? There's a high. This is the high that brought about this. So the market has not gone there. So it's very risky. So what are you waiting for? You are waiting for the market to either, as it move up, either again. So this another low, lower than this. These have been swept. You are marking this. Marking this, you want the market to actually rally up and then come back to either sweep this or failed or double bottom. Now, the market actually swept, but it formed like a double bottom in your line chart. So if that has happened, now after that, still an aggressive candle, a Bullish engulfing candle, highly aggressive. Came up. This aggressiveness is not an issue. You are very meticulous, right? A sniper entry trader, they don't care. As you just swept this one with this candle, this massive candle will put them to enter. But look at it. You are very meticulous, and you say, hey, now this is aggressive. Institutional are getting in. Look at it. This is the market has actually shifted. That is change of character. Now it has shifted. So the next you want, ordinarily, the next you want, listen to me, everybody. The next you want is any gap created by this wicked candle. Is this. Now, this candle was what caused this gap. Now, look at it. Look at the sweep. Oh my God. I've told you guys that if you are trading, you will have time for people, to be very candid, because trading is mechanical and you don't want to miss any step unnecessarily. Are you following? You wouldn't want to miss any step unnecessarily. So now let's go. The market has come down to this point. Now, and I told you the pattern of which I enter my trade in gap. How do I enter? I'm going to take my, right? I'm going to take my, right, gap box, and I will mark it from high to the low of that gap. Okay, so let me edit this gambot. All right, so here, you know what? I only need this guy. So I need 0. I don't need this. I don't need this. I need 0, 0.5. I don't need this. I don't need this. I only need 0, 1, and 0.5. All right. So I'm going to remove the background, and labels should be right. I'm going to put it on the right. So I'm going to remove all of this. I don't need them. Okay. Very simple, right? I don't need them. Don't need this. Okay. So very simple. So I click on OK. Okay. Perhaps I need to remove this other one. Let's go. Let's go. Let's go. Let's go. I need to remove all this. Oh, Felix, good to go. Very good to go. Now, see, I now do my style. I DCA in my trading. What do I call it? I DCA in my trading. Okay, you can see I zoom for you to see properly. Now, this, you didn't see properly that time. That was so squeezed. This actually came, swept the previous liquidity, which was here. This actually swept the previous day low and move and give money. Okay, so here the market came down to hunt it again, and this hunt, where was it coming from? Far up here. Far up here. Let's take it properly to see. Far up here. That's the high. Oh, so what are we going to do? Oh, no problem. You do nothing. The market has moved. You're watching. Now, as you're watching, you want the market to do something, probably return back here and do the same equal low, or to sweep, and it has swept. This is the candle that swept it, this massive guy. And this next one came, move a little down, and then engulf this one. This is already a signal for you, but you are very meticulous. You know what you are doing. You don't want to gamble your trade. So, but some other traders haven't seen this massive engulfing candle at an important level. They are going to enter at the close of this. That's what they do. But you, as a smart guy or smart money traders or institutional-oriented trader, you're waiting for something. There's something left behind by this guy. We call what we call imbalance. And that imbalance, are you going to enter it anyhow? No, the answer is no. I'm not going to enter it anyhow. There are 3 candles that created it, this one, this one, and this one. So you now, you want the market having taken out this high. Sometimes the body better, but no problem. These have been taken out. So you want the next entry. You want to enter here. Now, you now DCA. Look at the DCA. 1, if you want to place order, right, limit order, 1 at the center, 1 at this here, and 1 at this. Why do you set it that way? Sometimes the market will really tap into the fair value gap or to the middle and move, never come down. So, but in all, irrespective of where you take the trade, you are going to set your stop loss Conservative trader are going to set their stop loss like this. Look at it. Conservative trader will set his stop loss. Sorry. Conservative trader is going to set his stop loss like this below the total low of that candle, which is going to give about 60 something pips. But smart money traders are going to set their stop loss below this candle, the candle that engulf and cause that gap. They could be stopped out. They don't care. They will find another entry. Understand the pattern. They will find another entry. So that's what this guy had done. Okay? That's what this guy has done. And then he's going to do 1:2 risk reward. Now listen to me. In this 1:2 risk reward, they just end up being at the previous swing high. Even before then. So look at it. Before then, this is, oh my word. Look at it. That's 110 pips done. All right? So look at it. That was achieved here. Now, others will look at this high and place their take profit there. Then the other position, you enter 3 positions. Other position, you are looking at more higher take profit or let opened. So let opened, it continued, the market continued to rally. That broke. So this one that happened now is break of structure. That's broken the structure. It didn't even pull back so much and then continue to rally. Okay. So that you now have an extension. You can see and confirm with me that when you are doing this, you wouldn't have time for too many instruments. You are focused and you are making out money from that particular one you have chosen. Now listen, if for that day that one now messed you up, you're going to be messed up. Yes, fine. You have lost, no problem. But what messed you up more is trying to catch from here. And if it's not a swing trading, you can't do that. With a swing trading, you have entered the position, and like we have a position that was running yesterday, and we left it, and it was running. And so if you come today, that one's already settled. You are picking another one. That's a different thing altogether. All right? And now look at it. The market continue. Now, if you look at it, if the market continue with what it's doing, you are looking at another point. So this is how you shoot into the future and then end up having over how many pips? End up having 480 pips at the end of that day. So if it's 0.0, if it's 0.3, that was your target for the market, and you use 0.1 in 3 places, the other 2 closes, the other one, you track it and it could finish this. Check it. 0.1 times $1 times 480, that is $480. So, but rather than jumping here and there, moving, trying to achieve this, it's not going to work. It gives you so much issues and you will not maximize trade. Now, for more refiners, they go to 1 minute, guys. See more refiners. But it will be good when the market is actually at a turning point. So as a much heavy refiners, that will be good for you. So there's sometimes you want to do over refining may give you issues. So that means over refiner, we'll have look at it here, and then we'll look at here, and then change sweep, and then the pullback to this point is going to enter stop loss below here, and of course, which is still going to be similar. Okay. Now, if the market that have been doing some massive stuff, or when the market go to a point you have marked at a point, I could go to a more deeper refiner. But I think this 5 minute was better off in this case, in the case of this. But there's sometimes if you cannot find it properly, you want to do more deeper refining. And that's exactly what I try to achieve here. Okay. So the trade continue. You don't entertain unnecessary fear. Now, another thing I want to say is this, very importantly, when you are trailing your stop loss, most people just trail their stop loss anyhow. Why? How do they do it? They just look, okay, market has moved. Now, imagine if I'm trailing my stop loss, I've come and put stop loss here, trailing. You can get stopped out, ladies and gentlemen, because the major swing was this, right? Before this. Now you are putting in this one. No, the previous one is more protected when the present one has occurred. But the present one has not occurred properly because after here, break of structure, you have not had a concrete break of structure. It's just like a squeeze. Now you have a concrete one and another pullback to it, then you can now say my stop loss can be pushed here. That's why you are pushed out, and the trade after pushing you out continue in that way. Okay, so let's go back to the EU. All right, so look at it now. So imagine what we said here. I think we'll mark here. This is this EU. Was it this EU? Okay, no, we took this. Thank you. Good. What do we say here? We went to 1 minute time frame to refine this EU. Even if it's still 5 minutes, it's still going to be the same because just is similar. You can imagine you are waiting for this trade you have not entered. You see, Felix, that's wickedness. Now, okay, now this is another good news, but it's risky, deadly risky. Now that this high was still high, just like the gold we did now. Now that this high was still high, now something has happened on 1 minute time frame. This is a low. This was a high. Okay, that's not been taken off. Then we now have a high from this low. And then this is a low. So that means we're going to have a market structure shift from here. All right. And so this is a low, and this one become a higher low. So this higher low, what you want is very simple. The market has created that. You want a pullback. Of course, all of these points are not fully mitigated. They are fair value gap. All has not been fully mitigated. They are all fair value gap from here, like this. You see? Now, so what you want is that the market should return back to that zone, either here. So if you take my gambot and then do this, you see? So that means I will take a trade on this and the center, okay? And then my stop loss is still going to be here. Now, if I get stopped out, my stop loss will not be too reasonable. Let's look at it. So if I say, okay, buy, so let's stay here now. Then my stop loss, this candle, below this candle is my stop loss. For sniper trader, they don't have money to give to the market. They are very stingy. They are not liquid. So less than a pip. Yes, less than 1 pip. Okay. Or how many? Okay. Okay, about 8 pips. Okay. Sorry, about 8 pips. Now, conservative trader is going to push it down here below this high. That's about 14 pips. But sniper entry trader is this candle that caused that fair value gap. So they push it, and then, so you can see they are going to take profit here even. This is 2.6. That's 20 pips. That's big. For instance, all the time I was explaining to us, I didn't mean I actually stay here. I was taking trade, and let's look at it for where it is now. So I will have been targeting here, right till here. 1:2 risk reward. That will have been how many pips? About 15.9 pips. Let's call it 15 pips. That means I will have done 15 pips while we are speaking grammar. Then the other one I put at the center, if you take it, that will have been 18 pips, ladies and gentlemen. So settle with few instruments, perfect your strategy on them, make money rather than moving from different. Now, if they cause signal, now those of us who are on our forum, if they cause signal out of the instrument you are trading, yes, you can look at it. All right. If you look at it fairly good enough that you can take the trade, you take it. Then, if it's not a signal that comes for you in your market analysis and the instrument you trade, you have to stay focused on few instruments that you can monitor that's not too crazy. And that's why I said Euro USD, GBP USD, right? Euro USD, GBP USD, USD JPY, okay? GBP JPY is more volatile. And then oil and gold, okay? So if I had gone to, so let's go back. So gold, you can see, oh, okay. Is this gold? Yeah, that's gold. Oh, okay, okay, that's gold. All right. Okay, so this is what it is and all of that. So assuming I actually took that trade that time, well, I've been in money by now, okay? So if I've gone to my, I was telling you guys here, ooh, amazing. So we'll have done this too. The thing we just did here, this is a high, this is a low, sorry, and this is a high. So this is market structure shift. So this is a low. All right. So this is an imbalance. Understand, not all market could create it, but the one that create it make it more better for you. Because this is the engulfing candle that push up. And then here you find an entry, right? So that means here will have been in the trade. Oh, pain means I like taking trade while teaching to just show you how massive and amazing such strategy can be. I can target just this high or the next high, right? And then stop loss below this candle, which is already there. Then others that are conservative will take it here. But sniper entry trader going to go below this candle and then alash, they wait. So when the market move, this is 1:3 risk reward, guys. So that means setting to lose about how many pips? 7 pips. Setting to lose about 7 pips and getting about 23 pips. Okay? So that's more than 1:3 risk reward. And then it's going to go that. Okay, so very, very simple. So pay attention. Number one, you have told yourself, I'm not going to be trading too many instruments, so that stop trading randomly. Random trading is going to impact you negatively. In fact, it won't allow you to hold a trade that is running because you want to meet up with this. Yesterday, or previous day, we did some analysis and took a trade here. Did you know that that trade did not complete until this morning? Okay, but some persons will be afraid. We took the trade here and we took the stop loss here. Yeah, I remember. And we said the take profit should be somewhere here because these are liquidity down here. I think that did over 20 something pips, if I'm not, or 30 something pips, if I'm not mistaken. The market did die until it sold down, and then that was a massive one. But if you were carrying too many things at a time, you won't achieve that because you will struggle between too many things at a time. All right, so ladies and gentlemen, settle down with this video again and again. If you have not gotten the understanding, go back again, watch it. And then those of you who want to learn more advanced, all you need to fund your Capitalxtend account, minimum of, if you want to have one-on-one mentorship with me, then you're going to have minimum of 5,000 in your capital. Don't pay me, just fund your account. And so we trade and experiment with that money you have in your account. All right. Then those of us who are using our software, BEKENET software and all of that, I've done some videos, you can go watch it and then to be able to understand how to use the software effectively. And the other factors are there that you should learn from and maximize profit in this space. Thank you very much. My name is Midas Feljimo. Go to the comment section. You'll see links for brokers, Capitalxtend to register for if you're trading synthetics, derive synthetic, well-trade synthetics. Go there, pick your link, register. The software, BEKENET software, register, contact me and tell you how to get on board. And of course, if you have had your account activated on Capitalxtend, you have 1 month free trial. You hear me right? 1 month free trials. And even after that 1 month expires, you have discounted entry price. And that's one of it. And that's what it is. Right? You want to just subscribe for our signal. Maybe you want to maintain your broker and all of that. I think it's $50 per month. And 500 per year. Thank you very much. Do have a nice time. My name is Midas Feljimo. I'm the team lead of Xpress. Please like this video and comment, and of course, tell us more and what you want us to improve on. We will do that. Bye for now.